Now, company's EPS or earnings per share is one of the things that retail investors or investors look forward to when the companies release their earnings results. So this is one of the most important key term that investors look forward to, so as it determines the profitability of a company. So the more positive this figure becomes is the more investors get attracted to the stock, which is something that is truly amazing. And especially if this figure, or especially if this company continue to beat analyst expectations, this is something that attracts investors to continue staying on that company, because this, like I said, it just simply means that the company is becoming more and more profitable. Now, with all that, guys, Draftkings is one of the companies that so many retail investors have been sort of like complaining, especially looking at this EPS or earnings per share. So Draftkings, if you go and look in the whole year of 2021, from Q1, Q2, Q3, Q4, they failed to beat the analyst expectations in terms of this EPS, which is one of the things that made so many retail investors to be kind of like hesitant to buy these Draftkings. But one of the things, of course, that we saw from their Q3 earnings results is some of the catalysts which some of the investors got a bit excited again by investing into Draftkings, because you'll remember, if I remember correctly, that around those Q3 earnings results, Draftkings indicated that they will be adding 3 more states where they'll be offering their services. So that would result in them operating in 15 states, which is something that is incredible, as that made investors to sort of like look forward to say that maybe we can see Draftkings generating good revenue, which will lead them getting closer to become profitable, which is something that is truly amazing. Now, this week we saw the share price of Draftkings dropping sharply. This was after they reported their Q4 earnings results, and yet again, as I've said just now, they failed to beat the analyst expectations when it comes to the EPS and or the earnings per share. Because as seen on the screen, you'll notice that analysts expected Draftkings to report an EPS of negative 0.63, but Draftkings on their Q4 earnings results ended up reporting a total EPS of negative 0.79, which is something that brought a lot of concern yet again to investors to say that this Draftkings or this company is not improving in terms of this EPS, which is why we saw the share prices dropping sharply because of this wider than expected loss on their Q4 earnings. Now, this on Draftkings, guys, remain one of the main concerns, as I'm stressing out to you to say that Draftkings, it looks like they are failing to even beat analyst expectations every time they report these quarterly earnings, which is something that it is making some of the investors or some of the retail investors to sort of like end up selling their Draftkings shares, because they are noticing that it looks like this company might be struggling to reduce their operational expenses, which are the ones that are sort of like making them to report a wider than expected loss. Because, for instance, you will notice that as seen on the screen that this company for the whole year of 2021, and they reported a total loss or total net loss of negative or minus $1.5 billion, which is, like I said, a serious concern, because it is even much higher than the total loss they reported in the year 2020, which was around $1.2 billion. So things are not looking good for Draftkings, and I believe that though in the Q3 of 2021 they indicated that they are planning to further broaden their business into 3 states, which sort of like, I don't know, restored some hope, because other than the catalyst of saying that probably they are increasing or they are adding 3 more states into their database, or adding more states in terms of the states they provide their services to, it's not something that I believe investors can just continue investing into Draftkings because of that. I think Draftkings needs to seriously strategize as to what is it that can make investors to really want to go again and buy this stock, because as it stands, I don't think Draftkings is doing quite well. I mean, me personally, I also covered, I think, Draftkings after the Q3 earnings, and of course I said I'm adding this stock because those 3 states that they said they were going to have to the 12 states which they had made me to sort of like have hope, made me to sort of like wanting to go in and try to buy this company for the first time. But after the Q4 earnings results, I think this stock right now, just put it on my watch list, because I certainly believe that they still got some more things to prove out there in terms how they cut their operation expenses, which will lead them to becoming profitable very soon. So Draftkings continue to be that stock that personally I'm going to put it on my watch list and watch how the next earnings, the Q1 of 2022 earnings, looks like, and if they are changing or if they are getting better in terms, especially looking at the EPS, then I am for sure going to continue, or I am for sure going to buy this stock and add it to my holdings, because that is then, guys, the little holdings which I owned of Draftkings, I ended up selling them because I believe that from Q3 and Q4, I was hoping to see Draftkings reporting at least or beating at least the expected EPS by analysts, but they failed to do that yet again, which is something that made me sort of like ending up to sell my Draftkings shares, because I believe that, like I said, this company needs to prove itself to me and probably the other retail investors as to how do they plan to sort of like properly manage their operation expenses, because I think one of the things that can make investors to continue or to come and invest into a stock or to your company is to make sure that, of course, the operation expenses, I think, reduces over time, because this just means that as operation expenses reduces and your revenue increases, this will seriously just means that your EPS will also grow, which will mean that your company is becoming more and more profitable, even if the operation expenses are increasing at times. But I just certainly believe that there is more that you need to do, at least so that at least you can beat what analysts expect or predict in terms of the EPS on the earnings you are to report each and every quarter, which is something that I think as a retail investor, that's one of the things that I think we have to look too. Now, though Draftkings managed to beat the expected revenue of $443 million by reporting or by announcing a $473 million total revenue for the quarter, it does not mean that this figure alone it can attract investors into coming, because like I said, what investors want to know, or what investors really like, is to see the company improving in terms of the earnings per share, which is something that I think Draftkings needs to start looking or working at, reducing the operation expenses so that at least they can get a step closer to becoming profitable. So what am I going to do with Draftkings? Draftkings it's a company that I'm just going to put on my watch list for now and monitor how they are going to report their Q1 earnings results, and if they are improving, maybe, who knows, I'm going to go in again and probably buy this stock, because yeah, like I said, if the EPS or if the earnings per share is improving, that is one thing that attract investors into coming and invest to a stock. Otherwise, with all that, guys, I make tons and tons of stock market investing videos, and if you think that this video was amazing, please don't forget to hit that like button, comment, and if you're new, don't forget to hit that subscribe button and click on the notification bell so that YouTube can notify you every time I release a video. Otherwise, that's all from me, and I wish you nothing but the best in your stock market investing journey, and God bless you all.